Got a quick update for 2820 Rucker Ave, the doggy daycare that we went over yesterday. If you remember, there were quite a few outstanding questions. I got some of the important ones answered today in the Discord by the co-owner. Oh, what's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online. How did I forget to say hello to you guys? Sorry about that. And then after going over that update, I'm gonna just talk. I mean, I'm sure you get sick of hearing me talk about everything that's wrong with Lofty, but I want to really approach what I've been saying in a little bit different, from a little bit different perspective. Hopefully, I know there's a lot of you guys that watch my channel regularly that sort of understand the issues that I brought up. Some of you might understand them and not care, think going in another direction makes sense. But I just want to share a little bit of a different idea of why I think we have some problems on here. But first this update. So number one, the lease made it look like, and I asked this, right? And I'm just showing you the Discord. Normally I don't show the Discord because of people's privacy, but this is the co-owner answering, and this is my message. So I think the two of us are pretty much committed to answering questions here in the wild. I don't think it's a problem. Chris, if you happen to see this video, you don't like that I'm doing this, just let me know. I'll take this part down. I think it's, he seemed pretty open to just answering questions, and it's not giving away any of his info. Anyway, so the question was, the lease says 89.95% is the pro rata share of the tenant. Um, when we looked through the financials, it looked like 100% of the building was triple net. Another part of the lease said that there was some extra space that the tenant could take, but there wasn't any indication that they were going to. And so all of that together led me to not know, is this a single tenant triple net property? Is it a multi-tenant property? What's the story there? Chris's response on that, well, there was negotiation at one point. I mean, you can read that. There was going to be a separate tenant. Apparently, the lawyer didn't change it, is what he said. It's a typo, and they're going to get an addendum in the future to correct it. I was kind of surprised at how at this response. It's if I have a multi-million dollar commercial building and a lease that's creating basically all of the value of that building, right? I mean, leases are where, we talked about this yesterday. Leases are where the value creation happens in real estate, right? You're getting that, especially in commercial real estate, right? Where it's not just anybody can come and move into this, taking the initiative, finding those businesses, getting them going, doing that negotiation. There's a lot of value created there. If I'm going to do that, I'm going to read the lease before I sign it. So I was really surprised because Chris is the one who signed this, that this was overlooked. Because I mean, pro rata share is like one of the things that I always look to first. I mentioned I didn't really read that whole lease. I just skimmed over most of it. But that's one of the things where, and it's probably because I spent a lot of time doing lease reviews, both for investment purposes, and asset management. But it's that's one of the places where you get into real sticky situations where, okay, right now, technically their lease says they only have to pay 89.95% of the, taxes, insurance, CAM, all that sort of thing. Now, at the same time, it also says they're not using the whole building. So I think we have some leverage to fix it. But I don't know. I would just want to know this. Obviously, once that gets fixed, if we have an addendum and it makes it really clear, it's going to change my position on whether or not I'd invest in it. But it surprised me and is a little bit worrisome to me. That's a level of carelessness that that his attorney has, and then that also that he didn't read it and wasn't aware of it. Maybe he was aware of it, but if he was, didn't address it when he put it in the Dropbox. Um, the other thing, there's a question about, um, and the reason I don't, a lot of people are like, oh, I'm always criticizing the different co-owners, and I feel like that's our job as investors, right? And I'm just trying to share the things that worry me. Yeah, if I put my own properties on Lofty, I don't think they're going to be perfect, right? I'm going to screw stuff up. You're going to get bad documents sometimes. You're going to get, I don't think I do everything perfect, but these sorts of things, um, I just like to highlight, and I think that the level of diligence that goes into some of this stuff, I think is a good indication of the steward that somebody will be with our investment. It's not 100%, but that's why I mentioned things like that, right? Like, is it the end of the world that there's what he's calling a typo in there? or that, that some, an old business point was left in when there's something new has been negotiated. No, I mean, and I think especially if you have a good relationship with that tenant, and you do still have leverage because their lease doesn't say they own the whole, or get to have the whole thing. And I think, yeah, you're doing okay there. But I just, I just don't like it, so I want to mention it. Anyway, the other issue is, how long, we asked about how long that tenant has been, has been in business. Do they have other locations, anything like that? They've been running a business out of a portion of the property since November. So almost a full year, have been waiting for the permits for the rest of the space. And one of the things we found out is the permits haven't come through yet to finish the space out. And so the space isn't finished out. And so, if you remember the extraordinary assumption that was made in the appraisal that we went over in yesterday's video, one of the assumptions was that the work was already done, well, at this point, 12 days ago. So that's one of the reasons I really dislike extraordinary assumptions and appraisals, right? Because it created, it said, hey, we think it's worth this, assuming this happens. Well, this is part of that extraordinary assumption. It didn't happen, right? And so, that's a bit of an issue. It means that the uh, when the when the higher payment kicks in will take a little longer, right? So anyway, regardless of that, I mean, I think 1 month of that doesn't make a big difference. But knowing that, okay, they have been operating in this space in a limited capacity is helpful. But knowing that that tenant is a new company, brings us back to all the questions about, okay, well, what about the guarantor, right? What if this tenant is where all all our hopes and dreams are tied up in this property, and okay, it's really a startup. Okay, we have this guarantee of the lease. What does that person look like? I think that it really just now begs the question of, like, why are we leasing this property to this company? Hopefully the answer is, oh, this guarantor has significant assets, experience, income, all these things that lead us to believe that they'll be able to continue to be successful and, pay us the rent as it doubles over the next 3 years. Um, anyway, that's really the whole update on that. Uh, If you've been paying attention on Lofty, I've been showing you the state of the Lofty marketplace on Lofty Assist. I love this. I look at it every day. We hit a new low today on average token price. And so this is tracking all of the tokens across the platform that are traded in a liquidity pool. There are some that are traded only by limit orders, but this makes up, the vast majority of the tokens on the platform. And I would guess that many of the ones that are limit orders only are at least this low and sometimes lower. So anyway, $33.15. It's a tremendous destruction of values considering, every single one of these tokens started at $50. Um, you can see just as long as it's been tracked on here, this average token price. I mean, we had some ups and downs, but it's been pretty much down. Basically since the middle of May, right? I think there's been lots of reasons why. We have Lofty Day coming up tomorrow or the next day where all of them will reset. Hopefully that means we'll see a little bit of pop in that price. But, as some of the properties, maybe have turned around a little bit more, but we'll see. I'm not really sure that that's the case, but it's potentially could be. Um, if it keeps going at this trajectory, I mean, sooner or later, all of us are just going to leave the platform. Um, it is, as the average token price continues to fall, and real estate values are just not falling at this speed anyway. Really, anywhere that we're looking at properties, that are held in Lofty, it makes it so more and more the potential, where I think the value is in just buying these tokens and selling the properties in real life. And I'm working on a bunch of that. But anyway, what? So what's going on here? Why are we doing so poorly? Well, I've talked a lot about, Lofty is the NASDAQ of real estate, right? That's what they claim to be. It's a place where you can go and you can just buy pieces of real estate just like you're buying a stock. That's the goal. But one of the things that I think is happening is more and more we're not the offerings on Lofty are not real estate. And I think, and you can see that in some instances that's really hurting prices, and some of them it's not. But I think so. The biggest thing that I've mentioned is I think they're doing a terrible job of attracting the right properties to the platform. Right? They're not saying, okay, these are the types of criteria that we need to attract investors. Right? They're not doing any of that. They're saying, okay, if it's legal, you can do it. But then, in addition to that, and so that's been my complaint all along. I think they just have picked a lot of properties that should never have been investment properties. I mean, there's just a lot of properties in the world that don't make sense as an investment. As my day job, I run a real estate agent team that all we do is, look for investment properties for out of state investors that want to buy in San Antonio, Texas. Um, that's when we do that, there are at any given time there's 10,000 properties listed on the market, and if my team finds 5 or 6 deals in a month that actually work, I'm very excited about that, right? And we're in a fast growing market with relatively low prices for being the seventh largest city in the country. um, it's not easy to find good investment properties. And so when you're marketing and when you're out there in the world and you're saying, yeah, anybody can list a property on Lofty, um, well, 99% of the properties that get listed on Lofty are not going to be great investments. And honestly, I mean, it seems like that's been pretty close to accurate. It's really unfortunate. I hate to laugh about it. But, 90, 80%, I don't know what the actual number is, but the vast majority of their properties are properties that I would have never sold to a client as an investment. The revenue to price ratios just don't work properly, right? Or they're in a market with really terrible occupancy, or there's all these different reasons why specific properties don't work well as an investment property. So you've got that issue, right? But then in addition to that, now they don't just say, okay, we'll let you list any property. Then they also say, okay, well, you're really not buying the property, you're buying into the Dow, and we're going to let the Dow do anything they want. We're not putting any limits on what the Dow can do. You want to go, you want to sell this property and buy another one, have fun. You want to buy crypto, okay, that's great. You want to make loans to other DAOs, you want to make loans to individuals. Um, why is that a problem, right? Well, if I'm a real estate investor, which I am, right, and I come to a platform like this, and the promise is invest in real estate. But what I'm actually getting is I'm putting my money into what I think is a real estate deal. But if 60% of the people who decided to go into this deal with me decide, okay, we're not doing that deal anymore, we're going to do something completely different, uh, I'm stuck in that deal, even if they've tanked the price by proposing this. And now my options are to sell out at a loss because of this decision, or stick around with for something that is not what I signed up for as a real estate investor. And I think that this becomes problematic as it was kind of funny when one DAO was doing it. As more and more do it, it's problematic. I think the more it spreads across the platform, the more mayhem it's going to cause, right? And it's so I'm going to just start off and giving you a couple of examples. And I think most of you, if you're on Lofty very often, you already know these. So we have Garden Gate, right? This was a single family home in Harvest, Alabama. No debt. This was one of my favorite properties on the platform. I bought and sold it a few times because, uh, well, I have since. I actually bought it for the first time after there was the vote to put some of the operating reserve in crypto because the price tanked. Surprisingly, people that came to this platform for a real estate investment didn't want to stay in it if it was slowly becoming a crypto investment. Um, I'm not very surprised that a lot of those people sold out. It created a low price. For me, it wasn't a big deal, right? It's a small portion of the property value. So I bought some then. When the price really moved up, pretty strongly, I ended up selling out of it. But it is very stable property. It's had a tenant, had very few problems. It's relatively new. It's in a market that I like. This was actually one of the few properties when I bought into it that I described as something that I thought would make sense as a long-term hold. We don't have a whole lot of those on Lofty, right? Most of the properties are in markets where you just have horrible vacancy problems. You have a lot of collection issues, and they're just older properties with a lot of repairs and whatnot. So this property has been the model of stability relative to the rest of the platform, and uh, once the original Bitcoin, putting our reserve in Bitcoin thing happened, you started to get a little bit of volatility, but now it's just gone crazy since we've now had a vote to, okay, let's take a loan out against the property, take that money and reinvest it in crypto. Um, you've just seen, the prices are all over the place. Now, obviously, the people that are for it, they're just excited because now they're getting cheap tokens. But that's at the expense of somebody who came to the platform expecting a certain kind of investment, and now they're not getting it, right? And so I think that one of the problems that I've always had with Lofty is the only reason I'm making money is because somebody else is losing money, right? Like I'm buying discounted tokens. There's almost never a case. I mean, there's a couple of properties where okay, you can buy it at $50 and it actually makes sense. I have two or three of those at this point, and that's it. The rest of them, it is, okay, you can buy it at 30. It makes a ton of sense at 30. You can buy it at 16. But that's because somebody else already lost money. And so again, I mean, here, yeah, the people that want the Bitcoin exposure and want to stay in this property, it's fantastic, right? They're getting it. People are selling it to them at a great discount. But I think as a platform, it becomes a problem, right? You've got another one, Brownfield. This one is not. There's a proposal going out. Um, it's because the property is already in a terrible spot, and so this is the problem here was created by a co-owner who had the debt, right, and they had the debt outside of the entity, right. They were paying for it, even though it's a lien on it, um, and they had rent credits, right, and so that's more the issue with this one. I think all the stuff going on to quote to try to save it or some of that I think is also a little bit convoluted, but not necessarily the problem. This is one where you weren't really buying the real estate here. You were buying the promise of the co-owner to pay that mortgage and to pay a rent credit, right? This was very much not real estate that you were investing in. I mean, there was a property there, but it wasn't where the money was coming from. So that's one, that's another one. I wanted to start with this one and I forgot to, but so Odom, this is a property, I own more of this than any other property on Lofty. I bought it. It was already at a discount. Now it's at an even better discount. It's a single family home. When it started, there was a long-term rental, and then there was this little unit in the back that was maybe going to be used as short-term rental. I'm not sure if that's how it came to the platform or if it was just purely long-term rental at the time. Anyway, it turns out you couldn't do that with that unit. And then at some point, they decided to switch it to midterm rental. We tried to sell it. It's been on the market for a little while. It hasn't sold. Um, Now there's a proposal being worked on to switch it to a pad split. So this one is a little bit different. It's not that it's not, we still have a piece of real estate, but there are, people have been along for this ride of you know a number of different business models, and now this next upcoming proposal, um I don't know. I mean, I think it doesn't make sense to have a vacant property, but the yield that we're going to get on it is just really terrible if things go according to plan, right? Um and so this is where, one of the things I think that we need guardrails, not only around what you can actually do to the property, because like if the answer is, well, that DAO, you can, I think the more restrictions you actually put on DAOs, the less flexibility, um, the cleaner the market will be for the properties, right? If I want to buy long-term rentals, I'm buying a long-term rental. Now, there's certain instances where it makes more sense for that property, to switch business models, right? Like going from a long-term rental to a pad split or to a short-term rental. Um, but in those instances, okay, we've just failed at our, our original whatever they bought it for didn't work. Uh, I'm kind of on the fence about this, but I think I definitely think we need some guardrails as far as what you can do. I think one property, one DAO, cash and cash equivalents, those two things are that's it. But I think that even within the single property, um, somehow restricting the change of business models should be considered, right? Like, what are our exit strategies? Maybe they're defined up front and they are, take even more than a super majority to change. Because this is a property that I think is really suffering from too many options. I think I honestly believe the only right option for this property from a financial perspective is to just sell it and to sell it at whatever the market will pay us for it, even if it's as low as 450, which I think at that price it sells quickly. I could be wrong. I mean, I thought that with the owner financing at the higher price it was going to sell. I talked to a number of agents about it, and it really seemed like there was going to be a market for that. Turns out that was wrong. Um, even at so with the current proposal, I think you're still, if you, and I'm going to do a separate video about this, but I think you're financially better off to just take your like 37 or $35 per token at by selling out at a really cheap price and then putting that somewhere else, and I think you'd do better over the long term. Um, but regardless of that, I think this property has really suffered from too many different ideas, and we've changed what we've done. And we the first time we planned to sell it was almost a year ago at this point. But there was back and forth on, like, I think there we just don't have a good system in place for that, right? I've talked about that before, but this one a little bit different. Maybe I shouldn't have included in this one. Okay, this one on Madison Ave, right? This is one that was sold with owner financing. Is that so instead of now having a property, you're holding a piece of a mortgage. I can tell from some of the discussions in the Discord that some people don't really even understand what they own, right? I mean, there's people that's the case, and so should we not be able to sell with owner financing? I'm honestly not sure how I feel about it. One of the things that I think that you could do is when you have these changes, instead of being stuck in the DAO with this change, create a new DAO that, okay, we're gonna have, it's gonna be a cash transaction. We buy it and then we switch to this business model. We buy it, then we sell it with owner financing. Something like that, like where your only real option is to sell, but people, but with the change, so you're not like drag. So what's happening now is you can have a 60% vote and 40% of the people are dragged into something that is a completely different business than what they signed up for. Is owner financing that? Maybe, maybe not. But I think that the more convoluted you make the product, the more people are going to just leave the platform. Like, if I came here to invest in real estate and I bought, okay, uh, and I bought this one, and then it got struck by lightning, and we're getting a cash payout. And I think, great, I'm just waiting. Let me get my cash. And okay, wait a minute. We made what did they do here? We made two loans, right? Um, so this one was struck by lightning, sitting on some cash. Okay, the first loan, they're going to lend $70,000. Who are they lending this to? Is this one going to Earl Dow, or who is this? Or it's being lent to another DAO. I don't remember. And my reading is happening slow right now. Oh, that's okay. That was like in support of that short-term loan proceeds. Strongly recommend approval. Um, Man, it drives me crazy how I know I read this and I can't. Anyway, they basically had two votes to make loans. They loaned 70,000. I think it's to Earl Dow. I'm not positive. And then another. I don't think it is because it was short term. What were they doing it to? To another. Oh no no! It was it was a short-term loan to equipment property that's not on Lofty yet. That's going to onboard, but needed some work to be completed. Right. So okay. So now I had invested in a home with no debt. It got struck by lightning. I didn't get my money back. What I got was now a loan to another entity, doing, and whether or not I'm not making a judgment on whether that loan makes sense. It's just a discussion of from the perspective of someone who came here to invest in one specific thing, and now their money basically gets hijacked. Okay, you had cash, you could give them that cash, but instead it gets moved into some other business plan by just a 60%. Um, so you end up being able to control way too much money, or what, I just feel like there's a big chunk of people. It's not a tiny minority of people that are getting dragged along, right? It's a lot of times, and I mean, some of these have much stronger approval, right? So I'm not specifically attacking any one of these particular plans. I've shared my opinions on a lot of them, but I think that the more these different things happen, the more we open ourselves up to abuse, the more someone who is just you have a lot of these people that have different religious beliefs that they're not supposed to have any debt, and that's part of the reason they've invested in properties on Lofty is there is no loan, right? And so those people, okay, now they're being forced to make a loan in an entity they own. Okay, now they have to sell it, and the price crashes. And then again, like on this one, it's not even clear what they have at all, right? This was one. There was a vote to refinance. Um, I think the deed got transferred as part of that to Yom. I think this is one of those ones. But to sort of account for that, this one ended up making a loan to Earl Dow, basically. Um, which sometimes I'll have to do a full video on that, and maybe even get Earl to explain how it works. But I think initially this was done to sort of create an accounting of, okay, this is how the different DAOs that are all owed money by Yom or owe money to them could sort of move some of that back and forth, and have it all recorded on the blockchain. But if I had originally signed up to buy this property, and now what I own is, a DAO that has a loan to Earl Dow of basically the full value of that property, I'm just not going to be very excited about that, right? No matter how much I was interested in investing in Earl Dow, um, whether or not it's a good investment is not what I'm talking about at this point in time, right? It is uh, if it was the intention of the person that came to the platform. And so that's what I think is really, one of the things, I did a long video a week or two ago about how I think from an asset protection standpoint, it doesn't make a lot of sense to sort of keep this stuff in the DAO. And, I obviously my mind hasn't been changed about that whatsoever. I know some people have, made some proposals about using insurance and whatnot. And there's a big reason that every major investor in the world uses a similar setup for asset protection, and doesn't just take out insurance, extra insurance policies. You know, there's all these different ideas that have been floated around, when there's really a tried and true method that, I don't. The fact that we have DAOs, I don't think changes what's the best practice as far as asset protection, right? So I don't think that's changed at all. But I wanted to today just talk about from a different perspective, right? Like not like, okay, this is how professionals do it. They do it for a reason. We should do it that way. But on the flip side, thinking about like, okay, Lofty is tanking, right? Like, you just have more sells than buy every week. That's been tracked for now quite a while, right? Okay, you have to go back um, to the 17th of last month before you had a trailing week that was positive, and then you still, all of these I think represent a trailing week average. Um, you have, a token price that's continuing to sink. I think it's really clear that the direction of the platform isn't great. I think it's easy to blame it on the Yom stuff. It's easy to blame it on Brownfield, and I think those things, uh, are issues. Part of what made the Yom debacle such a problem is that they were taking individual DAOs, and we all of a sudden now are starting to treat it as a portfolio versus these individual entities. And I think that's why it's been so difficult to unwind, because there's all these cross interests, right? Um, and so that's the opposite, I think, of what would make a, if I, okay, let's think about, and I don't know what, what companies are actually NASDAQ companies because I'm not a stock guy at all. But if I would, if I were buying, I mean, I'm just going to make up, if I'm buying Apple stock, but somehow, okay, but now also because I bought that, now I have to have a little bit of Microsoft or whatever. I mean, I don't know, maybe it's a little bit different because when you buy those companies, you're really buying into the management team and whatnot. And so, what seems to be we seem to be moving in a direction of, lofty is not where you buy. I think fractional real estate is a beautiful idea. Like I think the way that it works on Mogul is fantastic. Which reminds me, please like and subscribe. In the description to this video, I have links to all the sites where I invest in fractional real estate online. Uh, Please do your own due diligence on all those sites. Don't just invest there because I mention them or because I provide links, right? You want to look at those, see if they fit for you. Same thing with any of the properties. Just because I mention invested in a property, you want to do your own due diligence on those. Um, and I have a Discord set up where you can, in the description to this video, you can click on that and join us for a discussion on any of these platforms. But so back to what I was saying. Uh, Mogul, I think, does a beautiful job of you're buying a property, right? All you're getting is that property. There's not I can do due diligence on the property. I know what the business plan is. And I don't have to worry about in the future the that entity that I bought into is going to buy another entity, or the owners in there are going to just vote to do something else, right? I've got an experienced team, and that's who's like making the sort of more day-to-day decisions and running that business. And so I guess that to me seems a little bit more like, um, investing in the Nasdaq, where I'm like, okay, I bought that business, but I'm really buying that management team. I'm buying who's running it and what their professional judgment. I'm never having to figure out what to do with it, right? We're here. Um, I'm not, you could say, oh, well, we have the co-ownership strategy. Right now, you're investing in a property and investing in that co-owner. Well, now we've seen co-owners ousted from properties and or just not running them or whatever the case may be. And, when you look at this average token price being drugged down, a lot of the recent activity that's moving it downward, is coming from co-ownership properties. So we can no longer blame low token prices on the legacy properties, right? Because there are now a ton of co-ownership properties that have had problems just the same. And so, it is so that management can, we can vote them out, and it is, yes, you're getting to decide that, but you're sort of at the, I think some of these bigger structural decisions, I don't believe 60% is a sufficient, super majority, um, to just sort of, change the business, especially the way it's exercised now, where they're not really even forcing like a quorum of tokens, right? Like sometimes you only have a very small percent. You're not getting 60% of the owners agreeing to do something. You're getting 60% of whoever votes, and a lot of times it's not a very large portion of the actual token holders, right? Which is, that's a different problem on the platform. But I think that the more convoluted all of these business plans become, it over time it's going to be okay. This isn't a platform where I invest in real estate directly. It's a platform where I'm buying into a bunch of different people's, mini Berkshire or mini REIT, right? They're just, whoever happens to be running the show is, making calls on, okay, let's make a hard money loan here and let's, buy up that property there and let's put some money on this platform. And I mean, we've got crypto and some, why aren't we buying stocks with some of them, right? Like uh, maybe that's going to be the next thing. Like, I think that the further we get from one DAO, one piece of real estate, cash and cash equivalents, the further we get from that, the more difficult it's going to be, one, to judge the value of an asset, the more difficult it's going to be to, um, just attract pure real estate investors to the platform. Because at this point, a lot of these DAOs, I'm no longer looking at this as a real estate investment, right? It is a one, maybe it's become a fund investment, maybe it's a REIT investment, but it's got ties to now multiple properties. I'm crossing some risk across that way. Um, there's no clear, like, even a clearer business plan direction, right? Like that can change, and we can vote for a specific thing and then not even really move forward, right? We only move forward towards it like half-heartedly. There's new votes that sort of just like hamstring us and make it so it doesn't go all the way. So I think really that what we need is more guardrails, not less, right? We need, and I know a lot of people on the site are, they like to be creative, and I just don't think, I think when you're trying to attract equity capital, um, you know, the simpler the better as far as both structure and business model, right? Like I think the more you start to create this complexity, it creates a more fragile system. Um, and it's just it's just not living up to the promise of what the site is, right? Like it's no longer a place where I can just go buy little pieces of real estate. Now I'm buying little pieces of real estate operating companies that who knows what they're doing. And anyway, I think it's a problem. I think that it's a very poor direction. um, it doesn't mean that some of these entities won't end up doing amazingly well, right? Like if Garden Gate, for example, if they buy a whole bunch of Bitcoin and Bitcoin 10x's, it still doesn't mean that was a good business model, right? Like it doesn't mean it was, because if that does happen, they would have actually been better off selling Garden Gate today and taking all the cash and putting it in Bitcoin, right? So um, it's not as if like some of these things, your hard money loan doesn't perform better inside the entity versus outside. Like I think that all these different things should be being done at the holding company level, right? Not the property operating entity level, which is what I think the DAOs were initially intended to be. Anyway, I know I talked about that a lot the other day, but I think hopefully this is a slightly different perspective, because it's not like, okay, this is an industry standard and these are the reasons why. It's really like, okay, these are your fellow investors in this product, and you know, I think it probably explains where all this volatility is coming from, right? Like you just have a bunch of people that are like, oh, I no longer get what I had signed up for. And it's not even like, oh, it's a little bit different. It's not even, okay, it's just the home and we're changing the business model. It's wildly different, right? If I'm somebody who bought a property with no debt and all of a sudden we're leveraging it, that's a big change to begin with. Okay, if you're leveraging it to disperse the cash to the owners, at least you're giving me my money back and I can go put it to work somewhere else. But now we're leveraging it and we're making a decision on the investment. Well, if you're in that minority that wasn't excited about that plan, and honestly, you never really know if it's the minority, right? Because you don't get full turnout with voting. But anyway, obviously there are a lot of unhappy people and they're selling out. Um, it doesn't make them right? But it's they're not it's not what the promise of the site initially was, right? And I think the more that you move from that, the less interesting it becomes to a whole bunch of people. I think it becomes really a lot of fun for the people that are trying to be creative, trying to do something different in each one of the DAOs. But I think that as a whole, looking at these from the outside as a new, I mean, think about, from the perspective of a new investor coming to the site, thinks they're buying real estate, and then starts to read each one of these and says, okay, well, what do we actually own here? Well, this is the address of the DAO, but it doesn't own that property. We actually own small interest in all these other ones through this other DAO. Um, I don't know. I think I've kind of beat that to death. I know I talk about it a bunch. I just really think this is the wrong direction for the platform as a whole. I think overall, I honestly, I look at this chart every day, look at our average token price and look at where things are moving. And yeah, hopefully Lofty Day comes in a couple of days and this starts to move back up. But I honestly worry about the future of the platform. Um, when the most compelling business opportunities are to buy properties on the platform and sell them in real life, it's a real indication that there's a problem. Um, and I think that we're just moving further in the wrong direction in an attempt to, get better returns. I don't know. Uh, I think that's going to be it for today. Really curious what you guys think about this. I know, obviously, I know what a lot of you think about it, but I'd like more people to join the conversation because I think there's probably like 6 or 8 of us on each side of this that I interact with pretty regularly. But there are thousands of investors on Lofty, right? And if you're one of the people who is selling out at a big loss on some of these properties, I'd be interested to hear from you. Or if you think, if you've been quiet about it, but you think, hey, this is 100% the right direction, we should just turn every single one of these into a mini Berkshire. They just buy whatever they want. Um, I'd be interested to hear, why you think that as well. Why you think this is the right vehicle for that, right? Versus, why not start a fund that's the goal is to do that, right? And where everybody is on board from the beginning. Is there a real advantage of doing it, of starting with a single family, an entity that owns a single family home in one of these markets versus, um, versus something else. Anyway, that's it for me for today. Until next time, I'm just going to okay, way too late. I am going to continue complaining about Lofty so that you don't have to. That's it. That's the whole video. I'm done. Have a good night.